Hello there, Cryptowisers. It's your good friend Milton here with another video for you. Holy smokes. Well, I guess I need to go on vacation more often because since I left, the crypto market went crazy. Now, guys, one thing I would advise you, do not go on vacation during this bull run anywhere where you have limited internet. Wow, that was frustrating for me. This was literally the worst week I could have gone away with huge things happening in crypto. One thing to let you know, this is a little tip for you. I mean, you do you, but for me, anytime I go on vacation, I never open my crypto wallets. I am that paranoid. I only ever open them when I'm at home and I have all my safety systems in place. I don't want to hook up to some weird internet and open them up. Anyway, anything I can do to limit my potential risk around my crypto wallets, I do it. And that includes when I'm traveling, I definitely don't open my wallets. But it was really, really hard this time. I would have loved to take a little bit of profit from certain coins and redistribute them into others. But guys, this is unbelievable. Bitcoin price briefly topped 69,000 for a new all-time high. Are you kidding me? We already reached the Bitcoin all-time high and we are still over 40 days away from the Bitcoin halving. This is unprecedented, guys. This does not happen usually. So this is really making me rethink everything in terms of this cycle. What does it actually mean? Look, we're all guessing. We're trying to figure out the probabilities. For me, it means one of two things probably. One, this could be a super cycle. People have been talking about that. Look, if it is, we're all going to be laughing. And this is going to be a really good year and a half. But what it also could mean is that the market just overheats too quickly and this bull run just doesn't last as long as the others. And maybe we don't get the multiples that we are used to. Look, that hopefully is not the case, but I'm certainly going to be preparing as if that is a potential possibility. What does that actually mean? Well, in my mind, it means that maybe the bull run only lasts less than a year. Like maybe it doesn't go into 2025. Now, all of this will be predicated on the charts and where we go from here. But the fact that Bitcoin has hit its all-time high this far before the halving means you just got to recalculate everything. It means certainly we knew that all the different cycles, they rhyme. There's a certain commonality to all of them in that Bitcoin cuts in half, the supply cuts in half, the demand goes up, and we see the price of Bitcoin go up, and that propels a huge kind of speculation in the altcoin market, which we see all these kind of altcoins follow and get crazy multiples. For the most part, those projects haven't really worked out or haven't created anything mainstream yet. What those of us in crypto who've been around for a few cycles are waiting for or hoping for is this kind of super cycle where we finally get that mainstream adoption with some of the dApps that are being built actually having real world utility. And we see Bitcoin become mainstream where it's not only these ETFs that we saw launch, but where you see kind of countries start to carry it or private family wealth funds. For anyone investing in money, it becomes an essential part of their portfolio. If that happens globally, then we could be in for a super cycle, and that would be outstanding. Now, in today's video, I'm going to be talking about my bull market strategy. A lot of you have actually asked me specifically how I plan to take profits this bull cycle. Where do I put that money? Do I take it out of crypto? What do I do with it? That's why in this video, I'm going to be answering those questions. I'll share with you my philosophy around this bull cycle and what I'm going to be doing in terms of taking profits, how I'm going to be doing it, where I'm going to be putting it, etc. But before I share that with you, let's have a look at how some of the altcoins that I've been talking about in my recent videos have been doing. And if some of you are watching, you're new to Cryptowise, welcome. We've been around since 2020, so we were around for the whole last cycle on YouTube. I've been in crypto. Now this is my third cycle. I originally got into crypto around 2016, but I didn't start Cryptowise, the channel, until 2020. If we're new to you, hopefully you'll consider subscribing to the channel. And if you you haven't watched my recent videos, I definitely hope you'll do that. I've been talking about some of my favorite degen plays for this bull run. Essentially, the last 4, 5, 6 videos have all been talking about different altcoins that I've been buying and adding to my degen portfolio. Now, one of those videos was about a project called getgrass.io. There is still time, guys. This is the easiest airdrop in crypto to qualify for. This is just a Chrome extension. You download it, you play it in the background, and it basically allows Grass, the project Grass, to sell any bandwidth of your internet that you're not using. There's this rewards program going on right now, so you can have it on in the background, collect points. They're going to be doing an airdrop of their token for anyone who's been collecting these points. So there's still time to do that. The airdrop has not happened. The token generation event has not happened. You do need an invite code to be able to join, and I've included mine in the description of this video. Thanks to all of you who have already used it. Really great. If I get up to 50 referrals, I'm going to be giving away a We Are the Walrus Solana NFT. Okay, let's have a look at the big granddaddy of them all, Bitcoin. Wow, new all-time highs, 40 days to the halving, incredible. So what happened? We hit that all-time high yesterday, early in the day, and then we saw this flash crash all the way down under 60, but we're seeing a really quick recovery. And this is something, if you haven't lived through a bull market yet, this is a really great sign and clear sign that we are indeed in a very strong bull market, is when we see these flash crashes happening and we see a very quick turnaround. And we've seen that with Bitcoin and a lot of the alts that also had a big dip. So we're back over 66,000. This is great. Honestly, if we could just hover around this kind of 65 to 67 range and kind of create some more support here, I would be thrilled with that. Anyone who thinks that the ETF news was just hype, one of those kind of buy the rumor, sell the news things, boom, wrong. I mean, we have legit now buying pressure that is more on a daily basis than what is being mined. And that's before the halving. Keep in mind, once that halving happens, the Bitcoin supply is going to cut in half, and that demand, therefore, will create even more of an uptrend regarding the price. Let's go to the weekly chart here and just have a look at what's been going on since the ETF. This is incredible. Wow. So yes, we did see, basically, I'd say from November on, we were sitting at around 37-ish. We saw some big pumps kind of leading into the news of the ETFs. Everyone knew it was going to happen in January, around mid-January. That is indeed exactly what happened. We are hovering at around 40,000, between 40, 42,000 for a while. Then the ETF launches. We get a big spike up right away. We got all the way kind of close to 49, and then it starts going down. And everyone thinks, see, told you, should sell the news. This is something to keep in mind with the altcoins. This is, something that can very much happen when an altcoin launches or there's big news on an altcoin. This is a pattern that is a very, very common in crypto, where you see that kind of spike and then a big drop. And we saw that with the ETF news. Spike up to 50, boom, back down. Everyone's like, oh no, we were wrong. And we saw it dip into actually 38. This is actually one of the moments, you got to pat yourself on the back when this happens. But I did actually buy more Bitcoin when it was at 38,000 after the ETF launch. And that was literally the bottom that I got a little bit more at. So I'm very happy that I scooped up a little bit more BTC there, because since then it has just gone crazy. As we can see, the last kind of 6-7 weeks, new all-time high, boom, amazing. But I know you guys probably don't watch this channel mostly for BTC news. It's more altcoins. I know you guys are a bunch of degens like me. All right, the first altcoin I want to have a quick look at is Sui. If you've been watching the channel, you know I've been talking about Sui for the last couple of months. I really love this as an additional layer one ecosystem that I'm going to get really heavily involved in this bull run. Last time, obviously, Polkadot was something that I identified as a blockchain, an ecosystem that I really wanted to build as part of my portfolio. I did that in the last bull run, and I've hung on to a lot of that, and I expect that to be fruitful this bull run. Now, of course, DOT really didn't have a huge run in the last one like I hoped that it would, but Still very bullish on it, very bullish on the ecosystem, but I do want to have multiple ecosystems that I'm heavily invested in. And Sui is one of the tokens in the last couple of days that I have been accumulating a bit more of. I'm not nearly at the bag that I want of Sui. First, basically because I want to own Sui itself, but also because I want to be ready to invest in new projects that are launching on Sui when that happens. It's up 10% today, so maybe that window is lost, but I still think it's underperformed compared to some other ones. Now, it had a good run up the last couple of months, so it was kind of ahead of this bull run in a way, as we saw it really climb up in December and January. It went almost to $2, and now it's kind of back down at that 150 range. So for me, this is still a great range to accumulate in. Because I was away, I didn't really make any other moves. But like I said, in general, what I would have done this weekend is rotate a bit out of my meme coins, and they're still super hot. So they kind of dumped yesterday. They had a big dip yesterday, and a lot of them have recovered quite nicely, including WIF. Pepe's been really hot. Shiba. Now, the one that I have the most exposure to is Bonk, and I'm still holding my Bonk. I haven't done anything there, but if it gets really hot again, then I will be taking some of my Bonk profits and allocating that to some other crypto that I think is lagging behind somewhat. But we're definitely seeing momentum with some of the bigger layer ones as well. Near Protocol is having a huge day, up 45% on the day. Render just keeps going. Wow, Render is just unstoppable. But we're seeing other laggards like Aave have a great day, which is nice. Even DOT is up almost 15% today. Back up around 1050. Great to see. So unfortunately for me, I wasn't able to take any profits this weekend when things were super hot. And then yesterday, again, other than buying a little bit of Sui, I wasn't able to really take advantage of that dip. But another great lesson in these bull runs. It's a cliche, but dips are for buying. Buy the dip. Certainly, when you're in a bull market, your probability of getting better gains over the long haul of the bull market is to be buying those dips and selling those really hot streaks. So if we have a look here, this is the Bonk chart, the weekly Bonk chart on Binance. We can see that this candle here, Bonk was going crazy and it had two huge candles up. And when that happens, it feels like things are just going to last forever. It's only going up, 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 up. And it can be really hard to sell a little bit of it to take some profit off the table. But usually there is always a reversal. So keep in mind that even in a bull run, there are always going to be some big pullbacks. So if something has an amazing weekend like the meme coins have, for me, even if I'm going to lose out on a bit of profit, I'm going to use that as an opportunity to take a little bit of profit, redistribute into other ones that are lagging behind, or even put it into a stable coin and add it to my dry powder so that on the bigger dips, I can be ready to buy. And as we can see from the daily chart, just the wicks of the candle, you can see the volatility that can happen in these bull runs. Like this, when you see these very long wicks, just goes to show the amount of volatility. So for me, because I missed it, I didn't have access to my Bonk this weekend. I wasn't able to sell anymore, and we're still too low now for me to take that profit. But normally, if I had been around, if I had my wallets, I would have taken some profit here. Probably not at the top, because you're never going to get that top. But as things were getting a bit too euphoric over the weekend, I would have probably taken some out. Probably in this wick somewhere, I would have been able to get some and redistribute that elsewhere. But because we've come back down, I'm just holding my Bonk for now. I think it will, again, have a run up, have a big hot streak that I'll be able to take some profits from it. So this leads me really well into what I really wanted to talk about today, which is my bull market strategy. You guys have been asking for this, so I just want to talk about this in a philosophical way, give you as much detail about what I'm going to do as possible on today's video. But as the weeks go on, I'm going to be giving you even more detail, exactly what I'm doing, where I'm putting stuff, and all that kind of stuff. We're still too early in this bull market. I haven't really taken profits yet. So I'll be talking in more generalities today about my strategy. But as the weeks go on and the months go on, I will, of course, share with you very specifically during this bull run what I'm doing with my profits. I cannot say this enough. The first thing about a bull market is you have to have a plan. You'll be amazed at how many guys get into crypto and they're just kind of winging it the whole time. I'm telling you from experience, write a plan down. What is it that you want to get out of this bull run? For me, I put a very specific number down and I say to myself, this is the number that I want to make. If I make more than that, amazing, icing on the cake. But my strategy is not to make less than that. So what I do is I build out my portfolio, which is of course ever changing. But when I do build it out, anytime I add a coin, I set specific targets. The very first target is a very important one, and I'll talk more about that one. But that's when I take my initial investment out. And then from there, I'm talking about profit taking. And that usually will be in 10% or 15%. As we move on and on, I'll even go as high as taking 20% off the table at a time. But usually the first profit taking is about 10% of what I own of it. And then from there, I might be another 10%, or other coins, it might be 15%. But then by the end of it, my targets, I'm taking about 20% out. What I always do is keep my bag at 30 to 50% of what I own of that bag. I'll probably hang on to, because this is the thing. For me, I'd rather have to be in crypto through the winter with coins that I believe in, even if they go down 90%, then miss out on uber gains on coins I believe in because I'm totally out of the market and I've totally misread the market and it's actually going to go way higher than I think it's going to go. So for me, when I get a coin, I have these targets, and then my profit, my target profit on that coin for me is usually at my 50% of that bag. And sometimes it goes up higher to 75. And in very rare cases, when I'm investing in something I don't really believe in, but I think is going to pump this cycle, then I will divest myself of 100% of that bag. But that's in a rare case. So my plan is there's a dollar number that I have as my goal, and I need to reach that goal with 50% of my bags only, 50 to 70% of my bags only, knowing that I'm going to be holding a bunch of still of those bags. So for example, okay, let's say Solana, and I'll just use round numbers. These numbers have nothing to do with my portfolio. Let's say I've got 100 Solana that I've bought. Okay. And let's say I've bought it at today's prices, say at around $130 a Solana. So my first target would be taking that initial investment out. And that will be different for every coin. Some coins I want, like my degen coins, I'm not touching them until at least 5, 10x to get my initial out, because I expect much higher returns from them. Something, if I'm going into a blue chipper, I'm going to try to identify how many X's that can do realistically. So for Solana, let's say maybe a 5X would be huge this time around. So I'm going to probably take my initial, if I'm someone new to crypto, I'm just getting into Solana, I'm probably taking my initial investment out at probably a 2X. And then from there, I would have other points of taking out, say at 3x, I would take X amount out. At 3.5x, I would take X amount out. At 4x, I would take X amount out. 5x, X amount out. And that's what I think is going to do this market. So at the 5x mark, I would still hopefully have around 50% of my bag that I'm just riding. And then I'll reassess at that point. Now, very important. Number 2 is stick to that plan, because trust me, from experience, things are going to get euphoric. It's going to seem like things are going to go out forever. In your mind, you're going to say, okay, I thought this could do a 5x, but now I think things are going great. I think this could do a 10x now. No, you cannot. You have to sit down and make your plan and be very strategic about it and really chart out for real. If you think Solana is a 5x, have very good reasons for why you think that, and then stick to that conviction. Don't keep moving the goalposts. stick to that plan. But that plan, if you're able to execute it this bull run, I hope all of you are, I hope that I'm going to be able to, means you're going to hit that dollar amount that you want to make out of crypto during this bull run. But you're going to be tempted by the powers of the bull run. I know I wanted X amount, but I could make even more money if I just leave it in. And then the next thing you know, the crash starts to happen, and that happens so fast that really then you're not getting even what you had hoped for at the beginning, and your whole plan is ruined. So you got to make that plan and stick to it, guys. Very, very important. Now, a few other things to consider. This is going to be different for everyone, which is why I will share with you this bull run, what I'm going to end up doing. I probably won't talk numbers, but I will talk specific percentages, when I'm taking profit, what I'm doing with that profit. But that it will be different for everyone. This is my third cycle. So I'm starting out this cycle with much more than I did in my first cycle. Hopefully won't make the same mistakes that I made in that first and second cycle, but I'm at a different point, and therefore my goals will be different. My timeline will be different. Now, if you're new to crypto, if you're just getting into crypto, it might take you a couple of cycles to actually reach your ultimate goal, but you want to be better off at the end of this cycle than you were starting out. And for me, my timelines are always pretty long in terms of crypto time. I'm not someone who trades every hour. I'm not trading every couple of days. For me, when I make an investment, it's usually weeks to months before I'm doing anything with them. Obviously, if all of a sudden there's a huge spike in the market, then I might act faster. But I'm always thinking in weeks and months. Maybe you're someone who wants to act faster than you, and you don't have the patience for that. But always have a timeline in mind. That's very important. It's a very important element in terms of your strategy, is really thinking in timelines. And for some of you, even though you know that there's going to be a crash, probably once, if there's a huge bubble that builds and then there ends up being a crash, you might say, I don't even care, because I'm in crypto, say, for the next 10 years, especially if you're someone who's super young right now. If you're, in your early 20s, you're just getting into this, you have a much longer time horizon before you need to make all that money. And think about all the people in Bitcoin who started at the beginning and who are still in it, how rich they are now. And then think of all the guys who tried to play each cycle and maybe screwed it up. And ultimately, if you bought Bitcoin at $1 and it's up at $69,000, are you really fretting over the fact that maybe you didn't play every market cycle the best that it could have been? Probably not. So what is your timeline? Also remember, things can go up or things can go down at all times. So just always be prepared for both of those scenarios. So for me, that means dry powder at all times, because even when I think it's going to go up, it could go down. And when I think it could go down, it could go up. Any decision I make, I always take into consideration, am I prepared for both sides of that happening? That way, no matter what happens, I can still contribute to my strategy, whether that's buying the dips or selling the tops. Number 3, don't go on tilt. Poker term for if you have a bad beat and then you start screwing around with your strategy and you start betting when you wouldn't bet normally or whatnot. Tilt is all over the place in crypto. A buddy of yours is going to make a ton of money on some alt you're not in. Don't chase that. You might fall for a phishing scam over here and lose a bunch of your crypto. Don't let that affect your strategy. Trust me, I have lived through it all in crypto. And the worst decisions I ever made were emotional decisions where I was literally on tilt because something bad happened, or I had FOMO over something, someone else was doing something that I missed out on. All that kind of stuff is when I started making stupid decisions. So make sure that you have a clear reasoning behind all the things you're doing. Don't just do it on emotion. That is never going to work out for you. All right. So to the meat of what people were asking me about, which was, how am I taking profits? I really believe in crypto. If you watch this channel, you know that I'm a true crypto person at heart. I think that the technology is going to be basically Web 3.0. It's going to be how the internet works, that there will be a number of decentralized layers and decentralized apps that are how we interact digitally in the world. It will be a big part of that, and a big part of how we do financing will be decentralized through blockchain, through these crypto projects. So I only change crypto into fiat if I really, really have to. Now, there are certain things in life where I need fiat money sometimes. Hopefully, I can cover all of that outside of my crypto. And if I can, then I will be keeping crypto 100% all in crypto. But yes, I will turn my profits into stable coins. And what I will do is I will diversify those stable coins into various ecosystems and store them in DeFi platforms. Is there risk to this? Yes, of course. But living through the last cycle, I can tell you I learned from experience that the money I had in DeFi last time was safe. The money I had on centralized exchanges and in platforms like Celsius, because if you have watched my channel from the very beginning, you know that I was a big fan of Celsius. I used that platform and it screwed me. And the ironic thing was, I thought it was the safe bet. I was used to a centralized world. I was tricked by the owner, creator of that platform, Alex Mazinski. I met him in person when he was starting it out, and I was sold on it. And I thought, you know what? This is a safe way for me to hold my crypto, get some yield on it. And in the end, it screwed me. But we saw all the DeFi platforms get tested huge last time. And did some of them fail? Yeah. Obviously, Luna failed, and that was a huge one. A lot of people lost a lot of money on Luna. Thankfully for me, I wasn't in it. But the people who got really screwed was if you had all your money in Luna, or a percentage of your money that was too big. But we saw platforms like Aave, any of the decentralized platforms, those smart contracts, they stood up. So when you had bankruptcies all over the place, that didn't affect the liquidity pools of Aave and the rest of those boring lending platforms on different chains. Now, the riskier, real degen platforms, a lot of those went under. But if you were just holding stable coins on them, for the most part, you could still interact with those platforms and get your money out, even if that token was basically zero. For me, the key is going to be diversify, 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 diversify. That is huge. That means multiple wallets, not keeping too much money in one wallet, because that is obviously something can happen there. You can be hacked, obviously. Something could happen to your secret phrases and boom, someone has access to that wallet. That has happened to me and it is brutal and awful. And when it happened to me, it was at a time in my crypto life where I was holding way too much in that one wallet. So multiple wallets, but for me, it also means multiple ecosystems. So I've identified 6 that I know for sure I will use. Probably by the end of this bull run, it will be even more. Ethereum. So why do I have Ethereum on this list? Super expensive. I hardly use it. Well, that's one of the reasons. 1, I do think it is one of the safest chains. 2, because it's expensive, I'm not going to be tempted to just kind of go in and move things around really quickly. So I will store some profit on Ethereum and on Aave probably. Polkadot. That's an ecosystem I believe heavily in, especially the tech of Polkadot and the security of it. So no brainer for me. I'll be holding some in Polkadot. Solana, Sui, I talked about it already today. That's a new ecosystem for me. I will be holding it in Sui. Multiverse X is a bit of a wild card, has been for me for the beginning. I did really well on it because I got in really early in the Elrond token. And so I have a soft spot in my heart for Multiverse X. 6 is another ecosystem that I've talked a lot about recently. It's a layer 2 on Ethereum, and specifically it's one that really focuses in on DeFi and doing innovative things at DeFi. So I will be also using Mantle to hold profits. Now, again, that is 6 different ecosystems. I will use multiple platforms in each. I will have multiple wallets in each. And I will hold, right now, the 2 stable coins I'll be holding are USDC and USDT because I trust them from being in them for multiple cycles. Another thing to keep in mind if you're new, I lived through watching USDC depeg about a year ago. It was scary AF. Now that it's gone through that, I trust it even more. But again, is a risk. We saw it with the Luna stablecoin. Stablecoins have risk to them. They can depeg, and if they do, it is very, very bad for that stablecoin. So right now I'm in USDC, USDT, but I imagine in this cycle we'll see new stablecoins come out, and I'll probably add a few more to be even more diversified in my stablecoins. Now, some of you might have a question if you're not used to DeFi at all. I did make a video on Merchant Mo, which is in my DGen portfolio right now. It's a new DEX on Mantle. So I love Merchant Mo, the token. I think it could do really, really well this bull run. But as I take profit, it's also a platform I could use to store my profit. So how do I do that? Well, you can just hold it in your wallets for sure. That is less risk because you're not dealing with smart contracts. But I will do some of that. I will also add liquidity to pools that don't have volatility. So stablecoin pools. So this one right now, I'm not in it because I haven't taken profit yet. I don't want to be in stable coins on Merchant Mo right now. But as I'm taking profit, this is, for example, something I would do. I'd go into Merchant Mo and I would add liquidity to their USDC, USDY pool. So USDY is a new stable coin on Mantle. I haven't looked super into it yet. I don't know that it's totally trustworthy yet. So I'm just using this as an example of something I might do, although I am not in USDY yet. Just caution there. But if it was something I trusted, then I would just add liquidity into this pool. So right now, what would I get for it? Well, I'd get less than 2% actual return on my USDT or on my stable coins. I'm fine with that. Lesson learned from last time. I'll take my profit, and that profit I want to hold on to as long as possible so I can be ready to buy more crypto. So I'm not going to be worrying about getting a ton of yield on it. I will be going for safe options as opposed to high yield for profits. As the bull run's going, I might, have a risky part of my portfolio for riskier yield-bearing products. But that to me is not profit. That's not where I'm putting my profits. That is still part of my risky crypto portfolio. But the reason you want to be in stablecoin only is because there's no volatility in theory if both stablecoins are at $1. What you can get is impermanent loss if you have two tokens like USDC. If you have USDC profit, but then you say, I'm going to pool that, say, with Ethereum. If Ethereum crashes, you will lose some of your USDC. Could potentially lose a lot of it. So you want to be in stablecoin pools. Now, for this one, an example, you'd be getting farming APR, which is the Merchant Mo pool. And right now, that's amazing because I want a Merchant Mo. But at some point in the cycle, a lot of these altcoins won't be worth very much. I can tell you from experience, if you continue to use platforms as they go down and accrue very good rewards in their token, when it seems like it's worthless, that can add up if that platform, again, does really well in the next cycle. So I like that aspect of it. Now, the rewards won't be as high as this. Merchant Mo just launched. But, let's say you get 5% even in that token through a whole crypto winter and your stable's safe to buy back into crypto market. Boom, double whammy, win-win. That's what I like to do. So in general, that is my profit-taking plan. I will be way more specific as the bull run continues and let you guys know exactly what pools I'm in, what platforms I'm going in, what wallets I'm using, what ecosystems I'm in. But yes, I will be staying in crypto, in stable coins, in what I consider low risk DeFi platforms. But key is diversifying. Many wallets, not too much in each wallet, not too much on any platform, and not even too much in one ecosystem. And in that way, I think I can be fairly safe as I can be in crypto. All right, guys, next video, I'll be getting way more degen. Don't worry. This was more of a strategy video. I wanted to get back now. Bad news is I am traveling again next week, so I won't get to do videos next week, but hopefully I'll get one up again this week before I leave. And in a couple of weeks, I'll be done my travels for a while and I'll be doing regular videos. So make sure you subscribe to the channel if you're not already. And of course, find me over on X at Cryptowise, guys. Love chatting with you guys over on X, so make sure you're following me there as well. All right, guys, thanks so much for watching today's video. As always, until next time, I'm Milton saying over and out.